when you have the high class problem of recognizing the role of gold and the role of silver as a monetary metal, as a wealth preservation asset to insure you against dying fiat money, which is dying right before your eyes in misreported inflation. Even former Treasury Secretary Larry Summers says we really have inflation about 18%. So you're losing money. If you're getting 18% on Nvidia, you're net nothing. But if you're buying gold to preserve dying purchasing power, to as insurance against dying currencies,
that can only be satisfied by a higher gold price. But that is going to be a gradual move initially. But at some point, it could be a major move, a major evaluation, because to satisfy this demand and to make gold the reserve currency of the world.
In this video, renowned financial analysts MatthewPiepenburg and Egon Von Greyerz foresee gold and silver reclaiming their roles as key monetary assets due to impending economic turmoil caused by reckless debt and poor government policies. Piepenburg advises caution when it comes to speculative investments, particularly when it comes to precious metals. He emphasizes that gold and silver should be invested primarily for wealth preservation against the devaluation of fiat currencies, rather than for chasing short-term profits. In March, the Bank of America warned of a possible collapse of the US dollar, with the country's national debt rising by $1 trillion every 100 days. From a technical viewpoint, Piepenburg notes significant outflows from silver ETFs, even as prices hit recent highs, due to investors needing liquidity. He further underscores the importance of recognizing real inflation, often understated, and the consequent erosion of purchasing power in fiat currencies. Silver funds snapped a 6-week run of outflows, and equity funds with socially responsible (SRI) or environmental, social, and governance (ESG) mandates posted their third inflow this year. On the other hand, distinguished analyst Egon Von Greyerz emphasizes that the limited annual gold production cannot satisfy the growing demand from BRICS countries and Eastern central banks. He foresees a significant rise in gold prices, ideally through gradual increases rather than a sudden U.S. revaluation. Interestingly, China has been reducing its greenback holdings. Since 2011, those have fallen by about 1/3 to around $800 billion. The BRICS countries, set to diminish dollar supremacy as the global reserve currency, have bought gold to diversify their reserve assets. Additionally, they are considering introducing a shared currency, posing a big challenge to USD's dominance. Now we present the clips of MatthewPiepenburg and Egon Von Greyerz' insights from their recent interview with Viereck Media. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
Mock those that are speculating. I do caution them to be very careful chasing a blow off top in the name of a few sexy tech stocks, and to think real carefully. If you're buying silver or you're buying gold and you're doing that to speculate, fine. You can buy at 24 and sell at 28. Okay, that's not the reason in our mind to be with gold. And that'll never be a good enough reason. And yet you're seeing, even as silver reaches these recent peaks through 30, you're seeing the silver ETF seeing outflows of 800 billion because they need the money. You're seeing literally Japan needs the money. They're selling too. But I mean, the point is, when you have the high class problem of recognizing the role of gold and the role of silver as a monetary metal, as a wealth preservation asset to insure you against dying fiat money, which is dying right before your eyes in misreported inflation. Even former Treasury Secretary Larry Summers says we really have inflation about 18%. So you're losing money. If you're getting 18% on Nvidia, you're net nothing. But if you're buying gold to preserve dying purchasing power, to as insurance against dying currencies, then you're not chasing narrow tops and you can sleep better at night. But I understand that many of your listeners are trying to get some type of return, or many retail investors are trying to get some type of return in something. They're literally picking up quarters in front of a moving train when you look at the actual real value, not the nominal value of a U.S. Treasury or a dollar bill or a yen or a won or a peso. So you've got to understand what your motives are. And if it's pure speculation, you've got to understand real rather than reported inflation. And if you have any wealth at all, you've got to understand speculation versus preservation.
In my view, the quantity of gold produced every year by the mines, gold mines, is around 3,500 tons. And that's being absorbed every year without central bank buying. Lately, we have seen the central bank buying, and that's why the price is moving up gradually. In order to satisfy the coming demand, plus the demand from the BRICS countries, And at a later stage, also demand from the public who are not buying today in quantity. In order to satisfy that, that cannot be done by increasing the production of gold. There isn't more gold to produce than the roughly 3,500 tons, increasing by maybe 1 or 2% a year. So that can only be satisfied by a higher gold price, that demand. But that so it's going to be a gradual move initially, but at some point it could be a major move, a major revaluation, because to satisfy this demand and to make gold the reserve currency of the world, which I think will happen, that will require a major revaluation of gold. And how many times gold will, and I hope won't be an overnight reset. You know, there are some people talking about that the US will revalue their gold, 3, 4, 5, 6, 7 times, or whatever it is. And that's a way of solving the US debt problem. That's one way of doing it. I hope it doesn't happen that way, because number one, you revalue gold and then issue money for that gold. I mean, to me, that's not real money either. That's fabricated money. And number one. Number two, in order to take the US revaluation seriously over time, show me your cards. Show me that you have 8,100 tons of gold. The world is not going to believe that. What is more credible is what is happening, as I said, in the East and the central, other central banks than Western central banks continues buying of gold in the BRICS country. That's more credible, and I hope it will happen that way, the increase in the gold price, rather than an artificial revaluation that the US does in order to solve its debt problem.
During the interview, MatthewPiepenburg believes the declining purchasing power of major currencies since 1971 underscores the importance of gold for wealth preservation. He argues that while the dollar remains strong for liquidity, its value erodes due to poor monetary and debt policies. The long-term chart highlights gold's rally from $252.50 in 1999 to the latest $2,429 per ounce high in April 2024. Gold's ascent in US dollar terms has been impressive, but the precious metal, a hybrid commodity and financial instrument, has appreciated in every fiat currency. Meanwhile, highlighting the severe decline of major currencies, Egon underscores their rapid loss of value against gold. He advises investors to safeguard their wealth with gold, anticipating the continued collapse of fiat currencies. Notable trends, like the growing use of the Chinese yuan in global transactions, bolster his perspective. Let's get back to the interview.
The purchasing power of all the major currencies since they took away the gold chaperone from the world reserve currency in 71 is objectively, empirically in decline. So measuring the best horse in the glue factory or the best patient in the ICU is irrelevant. I don't want to be the best patient in the ICU or the ER. I want to be out of the ER. And again, this is a very misunderstood topic. And it's not, I think it's often shunned by the conventional Western thinking in particular, and risk asset followers or speculators versus wealth preservers are very different motives. It's very easy to shun the gold narrative as dramatic because it's not fun at a Christmas party, right? It's not fun to discuss. You can't deny, regardless of the liquidity needs of the dollar and the demand for the dollar of Brent Johnson's milkshake theory, which we've talked about directly. Of course, the dollar is king for liquidity, but you're measuring your liquidity in an ice cube that continually melts. Again, this is not sensational. This is history. And the sins of the West's past, the mismanagement of its monetary policies, the mismanagement of its debt policies. You can buy time, you can have that exorbitant privilege for decades, but inevitably when you're spending far, far more than you're creating and your debt levels are becoming irrational, where you're talking about trillions, which I've said before, are abstractions, and you're supporting that debt by issuing IOUs that less and less of the world wants because the debt is so high and because the currency and the IOUs are less trusted. I mean, China and Russia are key buyers of U.S. treasuries, and they're now net sellers of U.S. treasuries. They're trying to move away from the dollar. In Japan's case, certainly, China and Japan, but in Japan's case, they need to sell U.S. treasuries so they can buy more of their JGBs to try and control their yields. They're desperate. Obviously, China is selling U.S. treasuries because they're more in bed with the BRICS mentality, and since we weaponized the dollar against Russia, there's just an obvious move away from an indebted IOU and a devalued U.S. dollar. And so the relative strength is fairly irrelevant to those who look at money, which is gold, and look at gold as a wealth preservation asset, as a rock that they can rely on.
Everybody may bet this time we're down 97 to 99% in every currency since 71. So we are now in the final 1 to 3%, taking it to zero. That's going to happen. We've learned that forecasting is a mug's game, and to decide the date when the dollar is going to die or the euro, etc., it serves no purpose. Investors, governments, we got to prepare for it. And if you are an investor and want to protect your risk, you already have protected against this. Since 71, as I said, measured against gold, everything is already worthless. So that final 1 to 3%, whether that's that is 100% from now, and whether that takes a year or 5 years, it doesn't really matter. It will happen. I think it could happen faster than we believe, because just take the de-dollarization. That's a fact. If you just take China as an example, now the cross-border payments in China, now it's now the renminbi that is dominating that, and it's something like 40 or 52% of cross-border payments, whilst the dollar has gone down to 49. That's new. That is a big shift, and that's going to happen across the world. Now, there is no prize for being second to the bottom or third, but so whether the dollar falls a little bit slower, I think Brent Johnson is an interesting theory. It absolutely serves no purpose in my view, because yes, so the dollar might be stronger for longer than the euro. Who knows? But it doesn't matter. They're all going to collapse, and they're all already have collapsed. If you're playing currency, yes. But if we are in wealth preservation, that we are helping people to protect their wealth, you shouldn't hold dollars or euros or yen or pounds. You should hold gold as your main currency to protect against what is going to happen and what is inevitable, whatever time period that is over. So therefore, we are not actually forecasting when it's going to happen. I think because of the US debt situation, I'm sure we'll come on to that, it's going to probably now, with the level of interest, and we are now in the exponential phase of debt creation.
The ongoing devaluation of major currencies and the shift towards gold and other alternatives will likely intensify. This was perfectly encapsulated when gold set its all-time high price numerous times in 2024, alongside the diminished purchasing power of the US dollar. According to a report from JP Morgan, gold prices should rise steadily quarter over quarter until peaking in the back half of 2025. Given these insights, what are your thoughts on the future of gold as a reserve asset and the potential impact of a BRICS shared currency on the global economy? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.